We've hit noon over in the Eastern Time Zone, and that means it's time to bring in tech trader Sean Udell. How are you today?
Good. How are you doing?
I'm doing all right. So, taking a look at the NASDAQ, we're not doing a whole lot today. We've seen a nice move off those December lows. Do you think we're long in the tooth now, or do you think we still have some upside left?
Oh, hold on one sec. Hold on one sec. I have briefing trader running in the background. There we go. Okay. Now we won't get a 10-second feedback loop or something like that.
Yeah, certainly don't want that.
No, I think in one of my last notes, I'm trying to find the date. I pretty much, well, I know what I said. I'm just trying to find the exact date. But my view is we could be due. I don't know if I'm going to have max conviction on this, but it's relatively high. I think we're due for a NASDAQ sell-off again. I don't think we're going to see something to the magnitude of the last one. I mean, we put in, I think within hours today is when I said that, we put in about 150 to 200 points. But yeah, I think I said something like we're due for a 300 to 500 point decline in the NASDAQ. I want to say it was last Tuesday, Wednesday. I don't know if that's really fulfilled. I don't know if like a day and a half to a 2-day correction quite gets us there. So February 6th is when I said that. I think we're ready or very close for 300 to 500 point NASDAQ lower. So I've made a lot of these calls. Usually, I can't remember the last time I had to change one. Like meaning, hey, this call didn't work, therefore it's null and void. I can't remember the last. I mean, pretty much my at least my last 4 to 5 market calls like this have been right without me needing to change them. The only one that didn't really fulfill quickly was the last one where I said the next correction is going to be a lot worse than the prior 2 major corrections we had in January, February, March of last year, and then we had the doozy. So. It took a couple months. Stocks had to consolidate. People kind of thought we were going to consolidate and go higher. I thought we were going to consolidate and go lower. We consolidated and went lower. But at rate, I've had a lot of questions on Twitter. I think, if there's one thing I think people need to understand, sometimes where you report in the particular earnings cycle is every bit as important as what you report. Because had Twitter reported that report 2 to 3 weeks earlier when, I don't know, companies like Texas Instruments were guiding badly and missing reports and their stocks were going up 5–10%, I think if had Twitter reported, I can't prove it because this is counterfactual, but I pretty much know it would have happened. So if Twitter would have reported 2 to 3 weeks earlier, I think stock would have been up. And I think it would have been up relatively the same magnitude it would have been down. Probably would have went up, tested 36, 37, and probably gone back and retested or, kind of retraced the move back to 33, 34. By the way, we're going to do the same thing. So instead of going up, we went down about 10%. But we'll go back to 33, 34 again. But not to belabor the point on Twitter. I actually think Twitter is I'm getting increasingly bullish again on the name because Twitter doesn't need a good market to go up. And the other thing I like stocks that I don't have to worry about the downside. I think a lot of times people say, oh, hey, like, what's this stock? What's this exciting stock that has all this upside? That's not really how you make lots of money. I mean, I catch plenty of stocks that have huge upside, whether it's a Juno on the buyout or whether it's various names I've gotten 2 to 3x plus moves out of. But you actually make more money by being in stocks that where you don't have much downside. And so even relatively small moves of 10 or 20 or 30%, especially if you can trade those multiple times, that can make you just as much, if not a lot more money. Because when you don't have to worry about the downside, you don't have to worry about managing your risk for that particular position. So you don't have to worry about adding cost of puts or hedges. Maybe you could lever the position up. I'm not saying you should do that, but I've done that many times in my life. Anyway, the bottom line, sometimes you can make a lot more money on positions if you have a high degree of confidence that you don't have much downside. But as far as the market, I don't know if we have a ton of downside, but put it this way, I don't want to buy anything. I don't want to chase anything now. I'm back in that mode. I don't want to chase anything. I don't want to, you know, I don't think it's a good time to look for chart breakouts to buy right now. In fact, I think that's exactly what the algos will be looking for to do stop raids on. I don't think it's a good time to chase earnings report spikes anymore. So basically, the good thing to do is the opposite of all that. Find stocks that have been beaten up on good reports. Find stocks that have spiked lower, not higher if you go doing longs. Find things that have limited downside. And guess what? I'm starting to get interested in shorting again. I literally have only had one short. I had 0 shorts for like four or 5 weeks. I covered all my remaining shorts on December 24th and 26th. That note's posted. I was heavily short June, July, August into the declines. Had one short on as of a week or 2 ago, which is a small short in AMD. Hasn't really worked, but I still like it for a hedge. But there's a lot of things. Put this way: when I look through 200 charts, as I do most days, and as I did on Sunday, I see far more setups on the short side for trades than on the long side. That doesn't mean, though, I actually like, for investment purposes, I still see a lot better long ideas. For example, something, and then I'll hand the mic over to you. But something like a spot, I'd much rather have a long in spot than a bunch of shorts and high-valued names for a multiple quarter time horizon, or let's say a 1 to 3/4 time horizon. Same with Twitter. I'd much rather have a long in Twitter than a short in VEEV, IGV, Microsoft, etc. Again, over multiple months, multiple quarters. I think there's a lot more upside in Twitter, in spot, by fiber optics thesis. Especially risk-adjusted upside versus trying to navigate, you know, timing shorts absolutely precisely. Again, I do like shorts. I think shorts work, but after this 300, 400, 500 point decline, then what's the next move? Next move's probably going to be a retest of the highs. So, you know, I'm kind of riding the fence here. So I do think next move's lower, but I don't think it's a major move lower. I think we're still in a repeal of the lunacy of the sell-off, the November and December lows. So until that's fully repealed, that repeal's probably not played out yet.
All right, so let's talk about some of these short names, and just in particular, when you're sizing up a short like this and you have an expectation that we could drop 300 to 500 points, let's say, are you just looking at this as a quick hitter where you'll take a quicker than normal profit in some of these shorts and then reload on the long side?
Yeah, that's how I'm looking at it right now. It depends on the name. I mean, if it was something like a VEEV, I don't know if they've reported. I feel better shorting something if it's already reported. So, but let's just use VEEV. You know, where if it's something that now this I think is an investment short, but the problem is you have to get paid, right? So you could be 100% right on VEEV, time the short right, but the problem is if the market, it's sort of like my NVIDIA short when I shorted it too early. I was 100% right. The problem is the market kept going up for about 6 months. So even though I didn't lose money, didn't really hurt me. It never really fulfilled. It didn't fulfill. I didn't get paid good on it. I got paid huge on AOI. Why? Because I timed it right. I got paid huge on Varonis, in New Relic and IGV again because, well, I did a combo of timing them right and hanging on to them until they paid out. I didn't hang on to NVIDIA long enough to score the big score. But, you know, hey, I was smart enough to avoid it and not get sucked into it either. So, you know, that's just as good. But, yeah, I'm looking for quick hitters because, again, so let's say VEEV goes back to 70, right? I mean, this is a name I really used to like. Still very, very fine company. I'm kind of worried that they're maxing out, that their current TAM is getting maxed out. They need to increase their verticals that they market their software to. But so even if I'm right in that this thing eventually goes to 70, if the NASDAQ goes back to 8,500, I don't think I'm going to make any money on that VEEV short, or I don't think I'm going to make very much. right? So it could kind of just end up being, you know, a small loser. Maybe it's break even. Maybe I make money on it a little bit. But the bottom line is, I doubt it's really going to pay off if the NASDAQ has another 1,000 points of upside. Now, if I happen to catch it just right, and we have a 3-day period where the NASDAQ goes down 400 points, yeah, it'll pay. Even then, I'm not sure it's going to drop 20 points. It might drop 10%, which that's always nice. But yeah, no, that's you phrased it exactly right. OKTA would be another one. Again, I don't think they've reported. Again, I'd stick to names that have probably reported.
Which one was that? The second one you mentioned?
OKTA. OKTA is, again, former name I loved.
What's that ticker?
Still in my focus list, I think. OKTA.
OKTA.
Yeah, I mean, this I personally scored a 2 to 3x return. I think the stock's moved almost 4x from when I first recommended and was along the name in the low to mid 20s. But it's, you know, $84. I mean, come on. I like the thing at 23 to 26. Not sure very many other people did. So I don't know, you know, again, they could have a great report and bounce 5, 6, 10 points for a day or two, but then I don't know what's left after that, right? We've seen a lot of that too. I mean, ServiceNow is another one where, you know, it hasn't really gone much above 228. 228 is that number I kind of thought, you know, this probably lines up pretty good for at least a short-term short. It's 230 right now. So, you know, if short 228 is not really hurting you very much. I mean, again, I wouldn't even get concerned about this unless I was down about 12%. So, you know, that's a lot of room. So something like that, that's reported already. Again, that's just a weird one. I don't really know why that stock went up 30. There was nothing. Sure, it was a great report, but they've had, I don't know, 16, 18, 25 great reports since I've known about ServiceNow. So great reports, not really a big surprise. Anyway, that's kind of it. I just think that it's, you know, you can probably hear it in my voice. I'm kind of getting more excited about looking for shorts, maybe putting some shorts on for trades. Again, the longs, you got to buy them ugly. I think if you're chasing momentum, put this way, if you're buying long on now, I personally know some people that like it. Yeah, you might be right, but I think the only way you get paid big is if I'm right that the NASDAQ gets pretty nutty. And if the NASDAQ gets pretty nutty, then the stuff that's ugly that you can buy at because it's sold off 10 or 15 or 20% post earnings is actually probably going to outperform a ServiceNow anyway. So you know, I don't know if there's really a way that I'm going to lose on being more negative on a ServiceNow versus, you know, a lot of the names I do like. And again, not to harp on ServiceNow, that wouldn't really be at the top of my list for an investment short, but I do like it. That chart looks prime. Well, put it this way, all you need for that short to work is a NASDAQ to go down. That's all you need. So where other shorts, you might need the NASDAQ to go down and or something else to happen. But yeah, I mean, you get a little sharp correction in the NASDAQ, and ServiceNow could easily be, you know, testing the gap, and the gap doesn't start till 210. The bottom of the gap's at 192. Stock's not cheap at 192. So I don't know. You know, it wouldn't be inconceivable for the thing to give up, you know, the 30-point move. Just saying.
All right, so for what it's worth, ServiceNow already reported in late January. VEEV is February 26th, and OKTA is March 7th. So you'd be reluctant to short these two?
Well, actually, VEEV, you know, just don't. I probably wouldn't do it and ride the short through the print. So yeah, I mean, up to the print, you're probably okay. Yeah.
Okay, so that would be the strategy there. So now that we've got most of the earnings out of the way, you probably have some post-earnings setups that you'd like to look at, and I imagine on the upside. So some long ideas that you may have. So what might? Well, yeah,
I mean, we just covered some. I mean, again, on the short, here's the short idea. Look at any single cloud stock that reported and has gone up 10% post-report. It's pretty easy. You know, I mean, any one of those. I mean, you know, we're in. You know, the phrase I like to use. Sometimes the ticker doesn't matter. I mean, if we hit a point where, okay, cloud stocks are just too expensive again, ticker won't really matter.
Well, what about Cloudera?
No, well, that's not a stock that's at multi-year highs. So that's the difference. It's also not a stock in the top decile of valuation for the cloud software group. So yeah, no, I don't. But by the way, yeah, cloud stocks, if people decide that cloud stocks collectively need a breather, Cloudera is probably not going to go up. It just shouldn't go down. It shouldn't go down as much as the other ones. But yeah, I don't think I'd short. I went short Cloudera. I mean, I'm going to be long Cloudera unless something just horrifically weird happens. I'll probably be long Cloudera for another 2 years. That's kind of best guess right now.
Okay, and I think that's a good point that we need to
Here's another one, not to interrupt you, but DBX. I don't, DBX, don't think I'd short that. I mean, again, it's you got to look at these things relative to valuation in the group and relative to what the stock chart looks like relative to the hot stock charts. So, yeah, it's all relative. Anyway, go on.
Yeah, I lost my train of thought, but that's okay. Oh, actually, it was to remind everyone that when you make a call, you're not looking for something that's going to happen in the next couple of days, not even the next quarter, but even, for instance, Cloudera. You just talked a 2-year time frame that you're willing to hold this one. So please, if anybody is following along with TechTrader, know who you're trading with and understand that the trade process is going to be extended more so than the some of the other guys who might be the scalp trader or swing trader variety. So you're in it for the long haul, and you don't get concerned over the intraday noise or even the intra-week noise in any given name.
No, at the same time, I frame trades up usually. So
right.
So usually if I like something really long term, I almost always call it an investment long. Whereas if it's a trade, it's a trade. And so trades for sure shorter term. And then if I say this is a short term trade, that probably implies short term. So hours, days, maybe a week or two. So like Trivago, I don't know if I specifically said, but I think I said not a day trade, though it may work out that way. So that I mean, unless you don't know the English language, that's pretty clear. That's pretty short-term trade. So stuff like that. I try to frame things up pretty well with at least as much precision around a time frame as I can. I mean, one thing I don't believe in is false precision. In other words, I don't believe that you can necessarily time something to the hour, right? To the minute. I mean, maybe some guy maybe Scalp's really good at that. That's not something I try to do. I kind of more believe, especially in the tech space, tech and biotech in particular, things move when they move. So they don't move because we all want them to move. They don't move because we think the chart is set up to move. They move when they move. So to be I believe in being anticipatory versus reactionary, but you also can't. I don't know, maybe we collectively, if we could get enough people willing a stock, maybe we could do it. There might be there's some relevancy there, but generally we can't will things in the time frame we want. We have to accept, right? This is a winning trading 401, right? We have to be willing to let stocks take whatever time they need to take to fulfill the move. So yeah, false precision I think is practiced way too heavily out there. Not on briefing, but kind of in the Twitterverse or in a lot of the financial blogosphere and things like that. A lot of these guys say, "Oh, hey, make money every day. Make trading profits every day." Well, I don't know. I don't know how many people successfully stay with those kind of systems very long without blowing up their accounts or leaving those services and things like that. So that's a whole nother conversation. But yeah, I tend to trade for a move. I don't trade for a time frame. Put it that way.
Okay. So are most of your post-earning setups on the short side, or do you have some longs?
No, I mean they. Again, the short side, we kind of covered that theme. There's definitely some longs. There's also some other ones coming. Like something like here. Pull up this chart. Pull up VIAV, VIAV.
On a daily or weekly?
Yeah, daily or a 2 hour, 1 hour. Something at least it has to go back to at least the October highs on it.
Yeah, I have it.
All right, so if you look at VEEV, so this is a trade and a potential trade setup. So first of all, on my technical system, I do believe that you have a double top which will be tested. I don't think this is a double top of permanence that like the stock's not going to retest it. I actually think this is a double top that's going to be broken. The stock has a long consolidation pattern on a weekly price basis. But you also have an old high on this that goes back to early 11, I believe, $16, $17. Here's the interesting thing. At 12, the stock's not expensive. At 15, it's not expensive. At that 17, 1650, 17 high of 2011, it's not expensive. That's a cheap stock. It's very undervalued. But stocks can be undervalued for a long time, as this has exhibited. But they had a pretty, see that spike pop? That was deserved. I mean, they had a very good quarter. This stock has a tendency to be a tough trader, has a tendency to have sort of post-earnings fades, but you can kind of see some buy-ins come in. And so anyway, I kind of like this one here. I have some, I think that there's a potential trade setup. And while I just said, now again, everything has an exception, I just said I wouldn't be looking for breakouts. I won't be looking to chase. If this thing breaks that double top, I would be hard pressed to think that that it's not going to try to move higher. So maybe this is a breakout that might kind of work. I would rather buy it now though. I'd rather buy it here than on a breakout, because you got quite a bit of move between. You got a full point between now and that breakout. So the bottom line is it could be a pretty interesting trade here. It could also be an extension trade. The difference too is this thing is not a cloud stock trading at 14 times out year sales. This is a very cheap telco equipment / fiber optics name. So and that's a group I actually do think will see price momentum fulfill quite a bit higher to the upside. There was a time, for example, when NVIDIA was stupid cheap, 25 to 30. Well, it was still cheap at 35 to 45, and it's arguably still cheap, 50 to 75, right? So the whole fiber optic space is, it's hard to find a fiber optic stock that's selling much above like 1.5 to 2.5 times sales right now. So that's a whole different valuation setup than stocks that used to sell 8 times sales and now they're selling up to 14, 16 times sales. So you've had massive valuation expansion over the last 5 to 10 years in software, particularly cloud software. You've had massive valuation compression over the last decade in telco equipment, for example. So so this is interesting. Do you want me to do another one, or do you have any questions on that?
On VEEV?
Yeah.
No. So you'd be interested in this one without even getting that pullback? Well,
it had a post-earnings pullback.
I'm talking about a pullback. I was talking about a NASDAQ pullback, so that 300 points.
Yeah, that's the caveat, right? The caveat is that pretty much everything we're going to talk about on these kind of setups, I'm not buying any of them right now. I'd probably, or if I am, I'm going to post it, but I haven't done it. So, yeah, I'd probably be more interested in seeing if you get some market weakness. And maybe you get some earnings reports this week that get sold. Maybe you get a 1 or 2 bad China trade news headlines or something. It wouldn't take much. I don't know though. This thing's pretty cheap. It's to me, it's kind of done the thing. It's kind of done the pullback off the post earnings high, and it's just spent what 2, 3, 4 days kind of in the same range. It's up 18 cents. That's not a big deal. Yeah, I don't know. That's I guess that's everybody's own personal issue. Do they want to have a pullback? Do they want to do something right here? If I were to buy it right here, I only buy a quarter to a third of it. Anyway, I'm long this name though. I'm long this. But if I felt like the pullback was going to take this thing back to 9 or 10, I'd probably be completely out of the position. So I have a core long, staying long. I think they're going to try to challenge that double top, and then above the double top, That's what I like to say in the NRZ, the no resistance zone. So yeah, I mean, I don't know. I like it better if we have NASDAQ weakness, put it that way. But I don't dislike it because, as we've seen, plenty of stocks can go up while the market's going down, just like plenty of stocks can go down while the market's going up. I don't know. Maybe not muddy the waters too much with worrying about the market. These are setups, so people can look at these setups. They can judge them however they want. But yeah, I think you're right. And the point being, would I like this better if on a day where the Nasdaq's down 55 to 105 points? Yeah, absolutely, I would.
All right, so all of these that we're going to talk about would be somewhat contingent on a pullback, and if you were to do anything, it would be scaling in on that process.
Exactly. Unless I've already talked about buying it already or something.
All right, so what's another one? So we have VIAV on your long radar. What's another one on your radar for the long side?
Well, you know, I'm gonna bring up FireEye. Hated FireEye, maligned FireEye. You know, so I knew we were going to be talking today. I actually kind of organized this one over the weekend. Well, sure enough, FireEye's up 4.2% this day. It's not really cooperating. I was, you know, so in other words, it would have been better if it was flat to down today. But here's the thing. So I have not added to FireEye for a long time. I have a long in it. I've stayed long in it. I think it's too cheap. They once again had a quarter, which my read was pretty darn good. The growth was a little bit unexciting, but again, nobody was expecting that they're going to go from 5 to 6% growth to 25% growth in the next quarter. That's it. This is more of a plotting cash flow, you know, EBITDA recovery story, right? Or not really recovery, improvement story. I do think I would not be a bit surprised if you remember when everybody was calling for flat to negative growth on Twitter. I said I wouldn't be surprised. In fact, I've modeled that Twitter's going to have a 20% plus revenue growth. And that's exactly what they did. In fact, I think they did 25, 26%. So I think everybody's modeling basically no growth for FireEye now. I wouldn't be surprised if either in the next year or the year after, FireEye is a mid-teens, high teens, maybe even low 20s grower. The setup's basically the same. But as much as I kind of have been, let's just say disinterested and apathetic towards FireEye. Again, it's cheap. I own it. It's cheap, so therefore I'm not going to sell my long. I'm actually getting more interested in it. I think between 14.5 and 16, I think sets up really well. And again, it was roughly at 16 or low 16s. It's popping. I don't know if it had an analyst. I don't even know if there's any news on it today. I don't like the fact that it's popping today. But yeah, 15.5 to 16.5, you know, especially below 15.5. This is pretty interesting. Again, this is one I really don't think they should have gone down at all on the quarter. And you know, everything that they're demonstrating to me is sort of value added from an intrinsic valuation standpoint. By the way, I raised my price target on that quarter. I actually, whatever my old price target, I think I took my price target up by $5 or $6. I think my old target was 25. I just posted the focus list late last week. I think my old target was either 25 or 26. I raised it 31. I think 31's no-brainer. I don't know how fast. I don't think it's going to take 5 years to get there. I don't know. I don't think it's going to get there in 2 quarters though. Here's what I will say about the stock. It's so cheap now that I think they have a couple quarters where if the stock doesn't get moving on its own, I think the odds of a deal happening are way higher. And while I never really want to own a stock purely on just because I think it's an M&A target, sometimes I will. I mean, I owned Imperva pretty much until they got bought out. So not pretty much, I did. I owned part of the reason I just said I'm not selling Imperva, it was just way too cheap, and they got bought out. They didn't quite. I thought they were worth about 65. I think this is pure memory here. I think they got bought out 56 to 59. I have to look it up, but I got paid okay on it. It wasn't great, but yeah, it was pretty good. So yeah, I like say everything I went back and looked at the last 2-3 quarters, and there wasn't anything that made me lower my fair value on FireEye. Pretty much, I almost felt like I was forced to raise my valuation target. Therefore, I did. So old target 25, 26, new target 31. Yeah, I mean, I now, it's like I say, it's kind of funny. You know, it's just funny it's up as much as it's up today, because again, unless there's an upgrade, I didn't know about it. But yeah, I think that sets up really well. This one I like better, and when we talked about it, I was really bullish post calls IIVI. Again, you know, the spike high was 40 and change. What was that? 40.15 roughly, 40.20. They've been very sticky. I mean, they haven't pulled back a whole lot from that. I said I would be a buyer of this 36 and a half. I did. You know, but this is one I really kind of felt that they probably should have got more out of that report. The single biggest thing I'd say on this is everybody punished, and I mean punished. This stock was 48 after its last print, and it was 48 and rising after the print a quarter ago. Then the light warning came out. The light guide down came out. And what did it do? In 2 days, it went from 48 to 33. Okay, so then it kept going down. You know, every Apple supplier in the world cut numbers. Well, funny thing happened. As of now, and it's not going to happen, by the way, unless some other part of their business that does it. But IIVI 2.6, they never got it down, did they? So this is one. I mean, do you want to say it should trade closer to 48? You could. You know, if you believe that the buyers of it a quarter ago were more right than wrong, and it deserved to be bid on, they arguably had the best quarter of any equipment tech company last quarter too. By the way, you know, that people forget. You know, everybody kind of thinks it's hey, this is just a 3D sensing story now. I would say they bought Finisar in large part because of 3D sensing, expanding that TAM. These guys have a very strong laser market. They have strong telecom, industrial. They get a lot of divisions that they sell, a lot of verticals they sell into. This is a very good company. So, and it's super cheap. I mean, this thing's just super cheap. So, and the Finisar deal is just going to make them that much cheaper, frankly. So I think this sets up pretty good. Again, it's below the post-earnings highs. This would probably be one of my top 3 to 5 names I'll be looking to buy/add on NASDAQ weakness. That's how much conviction I have in this. Definitely top 3, 4, 5 idea on sell-offs.
All right, so we've got VEEV, FireEye, and IIVI. I want to touch on a listener question while we're talking about FireEye, because it was one of the names that this listener brought up, and it's regarding when and what causes you to finally throw in the towel on a name that just cannot get out of its own way. So some of the names that he brought up were Groupon, Zillow, Redfin, FireEye. So looking at FireEye, this is one you want to add to. So maybe it's not a example, but what would it take to make you say, I'm wrong on FireEye?
Yeah, it could be a good example as anything. I mean, you know, different people do different things. I mean, I haven't added to it. I mean, I've even said I don't really want to add to it. I've added, I mean, again, we could go back and talk about the 11 stocks I removed from my focus list. So in the whole time I've been producing a focus list for briefing, I added to all those names. I made all those names new longs. You know, I favored Mule over FireEye. It doubled. I favored OKTA over FireEye. It tripled. I favored Coop over FireEye. It more than tripled. I favored Nutanix over FireEye. It more than tripled. So I don't know. I mean, I don't really know a great way to answer that. In other words, for the last 2 years, I haven't been saying to buy FireEye. I've said to buy 10, 15, 20, 25 other names ahead of FireEye. That's pretty clear. I mean, that's pretty clear. I personally don't have a reason to sell it. Like, I don't feel I have to take every single dollar of every single non-performing stock, sell it, convert it to cash, and move it into a name that I think is going to move. By the way, I would argue that people who do that don't really make money trading. So not to be too harsh on that particular person or that particular question, but I think that question in a lot of ways is a great question on maybe the right way to answer that question is examine examine your trading process. In other words, I'm very comfortable with my trading process and how I select stocks and how I favor versus not favor certain names. Here's one thing I don't like to do. I don't like to sell a name if I believe it's fundamentally undervalued. There's been so many times that I've kept names that have been fundamentally undervalued and scored, if not great gains on them, pretty darn good gains. I mean, put it this way, certainly market-beating gains, 2, 3, 4 times the market return. Now, sometimes that's not hard. Let's say you get a 6-month period in the market and the market only does 3%. Well, a 12% gain's never that exciting to me. But that would be 4x the market. That still adds a lot of alpha. So the thing I would say is, I could have said, boy, this Twitter's just not moving. It's stuck at 14 to 16. And I could have said, well, let me buy, I don't know, some other stock. Well, Twitter did pretty well. I mean, so in other words, here's what I found. If I stick to my knitting and stay in names that are super cheap fundamentally, I don't tend to have very many long-term losers. I don't tend to take very many capital losses. So I would say not taking very many capital losses, getting paid on the vast majority of my longs, and having lots of names in the meantime that do better than kind of, let's call it laggards, right? A laggard, that's sort of a laggard or an underperformer, which again, if I've favored 15, 20, 25 other names over the laggard, I don't know. It doesn't really feel like the laggard's really costing me much. By the way, as far as Redfin, at this point, Redfin's very close, very, very close back to my cost basis, which means a simple thing. It means I've actually traded Redfin numerous times and made money trading it as it's recovered. I don't know. Where's the highest I ever bought Redfin? I'd have to look at the platform. I don't think I've ever paid much over 22, 23 for it. That's not down very much. Redfin kind of had everything that could have gone wrong. Anyway, you don't want to spend too much time on the question because I kind of think it misses the point. I think the point is, if you have a process whereby you're rewarded from owning value because the value ends up paying you pretty well long term, I would say that that's a system that you probably want to stick with. As far as answering the question directly, I have to basically be wrong on fundamentals. I was very wrong in a company called Fusion.io. They never achieved the growth I thought they were going to achieve. It also was a little tiny, I'm not going to say the company was ultra promote, like it was a pump and dump scheme. I wouldn't say that at all, but they were highly promotional. They were highly promotional. The stock, they got the stock to go up pretty explosively a few different times. They talked a ton about Steve Wozniak being their chief scientist when it was. I don't know if this was ever really proved, but it was kind of, there was a lot of conjecture and pretty good evidence that he didn't really actually do that much for the company. So I don't know. I mean, I honestly, I'm not saying I never miss any of these because I definitely have some misses. I don't miss too many things on too many valuation calls though. I really don't. I wouldn't consider that I'd missed Redfin at all. I mean, again, it's basically back to my cost basis. It's not that far below kind of the most I'd ever say I would buy it. Now, if somebody bought this at 31 after I was saying I was buying it at 23, that's not on me. That's on them. So, yeah, no. I mean, what was one of the other ones?
Well, and just to...
I mean, here's a name I've been wrong on. Here's a name. SunPower. I've been wrong on SunPower. Again, it hasn't really cost me that much. I mean, I've never built this into a big position. I got a piece of it. I got a couple pieces of it. I'm not down huge. I've never made this a focus list stock, but I've been wrong. I didn't think they would still be trading under $6 right now. So I don't know. Maybe worry more about position management than worry about if, like, I think another way that what they're saying is, hey, when should I cut a stock? Because most other people out there say, hey, set a stop and cut a loser. I don't really believe in that, personally. I mean, again, everybody has to do what they want to do. My view, a lot of people, by the way, I've coached lots of people. I've coached lots of people who did the buy a stock, set a stop, get stopped out, rinse, repeat, rinse, repeat, rinse, repeat. And I've helped them recover huge losses because they blew up accounts doing the things that is conventional wisdom that everybody else out there preaches. I don't believe in conventional wisdom. I think most of it's crap. I think it's very easy to buy a stock, especially if you're buying stocks that are highly volatile. Okay, buy a stock, set a stop, take your loss. Well, guess what? If you do that 7, 8 times, you lost 50% of your portfolio. I don't think it works very well. It certainly doesn't work very well for my time frame. Put it that way. Doesn't work very well for my time frame. Doesn't work very well for tech. Doesn't work very well for biotech. So it might work really great trading futures that way. It might work really great trading currencies that way. I don't really trade those instruments. So, but yeah, no. I mean, like I say, I would say whatever you do where you have a high degree of success, who cares if nobody else agrees with it? If it works for you, keep doing it. Never quit doing it. That's what I would say. But as far as, like I say, as far as if somebody out there, a few people are asking questions trying to get me to admit I'm wrong on something, well, we'll see. I just admitted a couple. I've been wrong on FEYE. To me, this is not a game of really right and wrong. It's a game of, making money. And I don't know. I mean, Redfin hasn't really cost me any money. Again, now I'm pretty much break even, if not mildly positive on it. I've traded very well, caught some very good trades on it. I don't know. Like I say, I would almost say that question leads me to believe that there's broader questions in a trading / portfolio management process.
All right, before I get you out of here, are there any earnings plays pre-print that you're looking at for this particular week?
Let's see.
And again, let me phrase that with the high potential, that lottery ticket type play that you had called out a few times earlier.
Want the lottos. Well, okay, so there's a few we're talking about. Whether it's a Shopify, Twilio. This is a big week, by the way. SunPower actually reports on Wednesday. There's a few names that are interesting to me more. I'm going to say more post earnings.
Well, we talked some of the post earnings already. No, but I'm saying post earnings this week because Shopify is due to report, Twilio is due to report. I really want to see how those companies report. Pure Lotto, Twilio still. I think they're going to have a good report. I think they're getting close to a peak EPS possible trade, which sets up a short. I would rather probably short this post-print. Maybe some short lottos on this. Might be worth a stab. I would say that either next quarter or the quarter after is a better time frame, better timing to try to go after a short on it. But now sometimes you got to be a little preemptive. Maybe some lottos there. Here's a underfollowed, possibly out of consensus lotto. Now, hey, this is a name I wasn't really wrong, but I took this name off the focus list. I believe CRAY was on the focus list. Mm-hmm. It didn't really result in losses. It just didn't do anything. It was basically removed. It was one of the few names that has been removed due to non-performance. I think there's been 2 or 3. And it might have even been a winner. It might have been like a mild winner. I don't know, like 10, 12, 13% or something. But it just wasn't really doing anything. CRAY is a fairly important AI stock. Supercomputing company. There aren't many supercomputing companies left in the world. I believe CRAY might be the only publicly traded supercomputing company. IBM?
Pardon?
IBM doesn't count?
But they're not. I don't even know how much supercomputing as a percent of their business is.
Okay.
CRAY, it's the whole business.
Yeah, right. Mm-hmm.
IBM, is it even 10% of IBM's business? I'm not sure. I would probably say it's more than 3% of IBM. It's a small part of their total revenues. Now, here's what most people think are supercomputing plays: AMD and NVIDIA. Well, they sell chips into supercomputing, but they're not supercomputing plays per se. But okay, so what does supercomputing do? AI. So I thought CRAY was I actually thought CRAY was a great way to play NVIDIA when it was still like 85 to 100 to 125 and still going up. It never worked. CRAY didn't work. That's a trade, by the way, that probably would have worked when there was better pin action. I mean, you know, stocks used to pin more to other stocks. Pin action is very weird now. It's more ETF based. It's not really company or industry specific based. But CRAY could be interesting lotto play on the long side. Could be. Let me see what else. Because CRAY's kind of due. You know what? Same thing. I'm kind of waiting. I'm not sure. I'm kind of thinking CRAY could be a really good second half mover this year. Let me just see what else. God, there's so many names. CRTO, I mean, that's an interesting chart. CRTO, I like this name a lot. Now, that name's actually down today. I have to look. I haven't seen any news on it, although I've been kind of preparing for this. I haven't really looked at news. CRTO has been, I mean, this is one of those, this name is the longer the base, the greater the space potential type play. Very maligned, beaten up, but good business. You know, we've talked about CRTO in the past. I put it this way, if I were leaning one way, I'd definitely lean long versus short into the report. They report Wednesday morning. Yeah, I don't know. That name might be a better lotto, just the fact it's down $1.70 today. So what's that doing? That's making call prices cheaper.
All right, and for the record,
I'm still kind of looking. Oh, so go on.
Yeah, I was just going to mention that CRAY reports tomorrow after the bell. Okay,
yeah, no, I know they report this week. I mean, I don't know. Some people might think NVIDIA is a good lotto on the long side. I have no idea. I still, to me, NVIDIA pretty much fulfilled. So the reason I'm not commenting much on it now is, hey, look, I was saying the short at highs. Gone down 50%. I'm not one to kind of pile on and say a stock is a better short after it's already gone down 50%. I think a large part of the move's already happened. I do think it could go to 80. I really do. That's still, now I could be wrong on that and change my opinion on that. Because that one is kind of like, that's just a feeling. I can get there too on valuations, but I don't, you know, that somewhere between 80 and here is going to be there's going to be a really good long entry on NVIDIA again. You know, here's one, Talend, TLND. This is a new, and again, this is more a lot of, they already guided lower. Now, it's interesting, though, that they even guided lower because I think they only guided lower by something like $1 million. It was almost like, it was like the most benign guide lower I think I've ever seen. So somebody, it's on briefing. You can look it up on briefing, but you know, it's such an immaterially low number. I don't kind of wonder why they even guided. But yeah, I do expect that they will start inflecting and reporting better. Again, this might be a quarter early, but I am long. I'm gonna stay long into that print, and I could increase my long. Like this is a name I'd love it if it got cheaper, you know, closer to the report. They report on Thursday. So, you know, we'll see what happens. You know, Yeti reports Thursday morning. I hit that pretty good last quarter. That might be a decent little lotto. They probably have the only problem with them is I think everybody in the world expects them to have a good report. So how good of a report are they going to need? But if there's any company that they could blow it out, Yeti could blow it out. They could blow it out to the upside and have a very good report. Seasonal stock, though. So once you get through the holiday season, you know, where are they going to guide? So it's a little tougher call. But like I say, they're probably going to move more on the quarter than the guide. So yeah, that one could work. That one could be there. Again, I like Redfin. I don't know. You know, that one, like I said, it's just funny that I get so many questions on that one. Like I said, I've always framed this as, hey, this is one of my favorite small mid-cap growth stocks long term. You know, they've had a lot of real estate's been weak. By the way, a lot of home builders have reported fairly good, but you know, Redfin is a market share story. It's not a quarter by quarter story. So it's a TAM expansion story. It's not it's not like a, you know, a ServiceNow type story where you own ServiceNow through prints because you expect them to keep knocking the cover off of earnings beats. You know, Redfin might do that at some point in the future, but it's more of a they're growing revenue based on a growing TAM, market share, disintermediating, disrupting a current industry. Those companies tend to have more of a plodding growth cycle as opposed to an explosive type growth. If real estate was hot, I think their numbers would be explosive. Real estate is not hot, so that's the thing. You have a cyclical low in real estate activity combined with a company that's growing market share. So the two things are kind of offsetting. By the way, I mean, Redfin's still putting like 33, 35, 38% growth. So it's not like they're not delivering growth. It's just not that they're not blowing out quarters. So I don't know. I mean, you know, expectations are probably pretty low on that. I don't know. That one I probably went. I would just say, look, you know, I'm long. I'm going to be long. I'm going to stay long. I'm going to add on weakness. And I think that'll monetize very, very well, just like my other long-term positions have done.
I'll tell you what I see on this one: a inverse head and shoulders, and on the verge of breaking out of the right shoulder pattern of that.
Yeah, I mean the chart looks pretty good now. I mean, like this is one where, like I say, this reminds me a lot. Somebody asked me, hey, MTSI is 1830. Would you buy it in front of earnings? I'm like, well, my last buy was 1480. So my pre-earnings buy was 2 weeks in front of earnings. I'm like, I think I answered the question like, well, if you didn't have any, it could be. By the way, MTSI's made a very, you know, I'd probably remiss, should have. That's been acting really good. I mean, that thing, that earnings sell-off has not lasted very long. The stock's back at 17 from an 18 and change pre-earnings. That's not even down that much, right? That's a pretty swift bounce. You know, I caught a nice trade on that, by the way. I think I bought some at 15 and a quarter, 15.26. Actually now a fair bit higher than where I sold that clip, but that was a very nice little clip I made like in a day. So that's another name. That name's rebounding very strongly. But again, my whole issue with Redfin is just like MTSI. So if you weren't buying it 14, 15, it's just not as good of a buy now. So I have a hard time saying, yeah, it's a buy if you don't have, yeah, it's a buy if you don't have any, and you have my view that you're going to own it and hold it, not take a $1.50 stop out on it. But you know, it was a better buy, cheaper, and you know, Redfin gave people plenty of time to buy it lower too. So that's the other thing. Now, could it be like the Skyworks we talked about? How I love that name, dirt cheap in the low 60s, and then you were 100% right saying, hey, that break at 72. Well, the break at 72 was buyable, wasn't it? Sure was, right? They're another stock that popped on a report that really wasn't very good, and then it popped for a day, and then it went back. It gave up 10%. I still like Skyworks, by the way. Love Skyworks. I mean, it's one of my. I think I said it was one of my top 3 to top 4 5G names long term. So yeah, your technical call on at 72, you know, would have worked, right? But I don't know. I'm the type. I'd rather say this. I'd rather say, hey, I missed something that I should have bought. I missed Roku. I should have been buying Roku in the low 30s. I didn't buy it, therefore I move on. Because if I buy something that I knew I should have bought between 30, 32, at 33 at the highest, and it's 46 today, I'm probably not going to buy it. I'm going to wait. I'll just wait because there's other names to buy, and maybe Roku gives me a chance to not look so foolish because I really should have bought it at 32 and below. Maybe they give me a chance. Maybe they go to 30. We may never see 32 on Roku again, by the way. But I don't know. Maybe they'll give me a shot around 36, the top of that gap fill. You know, maybe put it this way: anything lower than 46 is good. 42, 38, 36. So anything that bridges the divide between where Roku's trading right now and 32, that would work for me, and the lower the better. But yeah, things like that I think set up really well. But I'm glad we ended up catching MTSI, because that was another one I wanted to talk about. There was one other earnings one I was gonna bring up, because I'm looking for it. I don't know. I think we covered it pretty well. Again, you know, I guess Cisco probably could be. Okay, now I typically don't like buying stocks after they've gone up a lot. We're in a pretty good environment for Cisco right now. I don't think I'd buy it, but like this is, you know, $47 stock. Cheapy lottos could work on Cisco. You know, I don't know if they're going to have great things to say, but this is exactly the kind of stock that I think is going to keep working this year. It's cheap tech. There's 5G. They've made some investments. I don't know. I don't like too many of these uber large cap, slow growth companies. Cisco would be one of the ones I do like in that count. That's probably enough. That's probably enough lotto ideas.
Yeah, I think we've got a lot of ideas. A few shorts, few longer-term longs, and some pre-print earnings plays. We've got a lot of good stuff, a lot of good updates. So, guess what, Sean? We can have a lot to talk about next week. We'll do some follow-up and see how these ideas worked out. As always, my man, thank you so much for joining us.
Have a good one. Take care.
All right, you too, Sean. So there you have it, a few ideas laid out by a tech trader. Had a lot of interesting trading calls today. Some of the ones on the short radar: VEEV, OKTA, and NOW, ServiceNow. His longer term on the long side: VIAV, FireEye, FEYE, and 26 IIVI. Heading into the print, he's a little iffy, so not a whole lot of conviction on a short of TWLO. Thinks that may potentially be a next quarter type play, especially if you get an advance. If this thing advances up, TWLO, TWLO. But said it might be worth a look on the short side. Another interesting one on the long side, preprint, was CRAY, C-R-A-Y. And he also seems to like that one as a supercomputer AI play, something that he thinks could really be beneficial in the back half of this year. And the other one, CRTO. And he likes this one as it has pulled back 6% today. Could not hold that 200-day moving average. Looks like it's dipping down in the neighborhood of the 100 EMA and 50-day moving average around the $24.50 area. So quite a few names of idea generation for you out there. And that comes from Tech Trader.